Most people who research Malaysia's Digital Nomad Visa walk away thinking it's simple. $2,000 a month in income. Fill out a form. Wait a few weeks. Done. That's the version that circulates in travel forums and YouTube comment sections. And it's incomplete in ways that have cost real applicants real time, real money, and in some cases, a trip back to the airport they didn't plan for. By the end of this video, you'll know exactly what the income rules actually require, including the number most videos don't mention. You'll understand what the approval process genuinely looks like from people who've been through it. And you'll know the hidden restrictions buried in the fine print that nobody covers until it's too late to matter. This isn't a promotional guide. It's what a careful researcher finds after going past the first page. Malaysia's DE Rantau Nomad Pass was launched in October 2022 by MDEC, the Malaysia Digital Economy Corporation, the government body that runs the program. It's not a tourist extension or a workaround. It's a formal professional visit pass that gives legal residency to foreign remote workers for up to 12 months, with one renewal available for another 12. In total, you can stay up to 24 months. The cost is approximately 1,000 Malaysian ringgit, roughly $220 for the main applicant. On paper, it is one of the most accessible digital nomad visas in Southeast Asia. In practice, it rewards people who prepare carefully, and it catches people off guard who don't. Let's get into what you actually need to know. Here's where the first problem usually starts. Almost every summary of the DE Rantau Pass mentions the same number, $24,000 per year. That's about $2,000 a month. For many remote workers, that threshold sounds achievable. And it is, but only if your job falls into a specific category. The DE Rantau program draws a clear line between tech and digital professionals on one side and everyone else on the other. If you work in IT, software development, UX or UI design, cloud computing, cybersecurity, artificial intelligence, machine learning, data science, digital marketing, or digital content creation, then yes, the income floor is $24,000 annually. But if you are a founder, a CEO, a chief operating officer, a tax accountant, a legal professional, a technical writer, a business development manager, a public relations professional, or any similar role that doesn't fit squarely into the digital or IT category, your minimum income requirement is $60,000 per year. That's $5,000 a month. This expansion happened in June 2024, when the Malaysian government officially broadened DE Rantau eligibility beyond tech roles. The stated goal was to attract more diverse professional talent to Malaysia. But the income floor for those new categories is 2.5 times higher than the tech threshold, and most guides online still only publish the lower number. If you assume you qualify at 24,000 and you actually fall into the 60,000 bracket, you'll likely face rejection after weeks of waiting, with documents already submitted and fees already paid. The application fee is non-refundable. Check which category applies to your actual job title before you prepare a single document. And this isn't the biggest issue. The documentation process is where things get even more specific. Knowing the income threshold is step 1, proving it is step 2. And this is where, honestly, a surprising number of applications run into difficulty. The document requirements are, well, pretty specific. MDC expects your last 3 months of bank statements, your last 3 months of pay slips if you're a remote employee, and a valid employment contract or client project contract with a duration of at least 3 months from the date you apply. Not 3 months total, 3 months of remaining validity at the time of your application. If your contract is set to expire in 45 days, it doesn't qualify even if you've been working under it for 2 years. For freelancers, the requirements tighten further. You need active project contracts, not past ones. Those contracts must show verifiable foreign clients. Revenue from a YouTube channel, from ad platforms, or from digital storefronts is harder to document in the format MDEC expects. If your income comes primarily from content platforms, you can still apply, but you'll need to provide platform income statements and demonstrate that your output is consistent and ongoing. The most common documentation mistake is a mismatch between documents. A job title on your CV that doesn't clearly match a recognized digital category. Bank deposits that don't align with the payslips. A contract that expires within the same month as your application. MDEC reviewers look for consistency across everything you submit. When something doesn't match, the application either stalls or gets rejected outright. One detail that catches remote employees specifically. Your employment contract must be with a non-Malaysian employer. Work for a Malaysian company, even remotely, even from abroad. And you don't qualify for this pass. The income must flow from outside Malaysia entirely. Treat the documentation process like preparing for an audit. Every figure needs a paper trail, and every document needs to agree with every other document. Here's the part most people miss. The advertised timeline isn't what real applicants actually experience. The official processing time listed by MDEC is 6 to 8 weeks. That's the number in their FAQ. That's the number most YouTube videos repeat. And for some applicants, 6 to 8 weeks is accurate. But a meaningful number of real applicants, including documented renewal cases from 2025, report timelines of 4 to 5 months, not 6 to 8 weeks, 4 to 5 months. One detailed applicant account from mid-2025 shows a renewal submitted at the end of December 2024. After following up repeatedly, encountering MDEC's communication slowdown during the Chinese New Year period, and waiting with no meaningful updates through March, the applicant discovered in May that their approval had actually been granted in April. But because they had briefly traveled outside the country, the approval was automatically returned to review. It was reapproved. When the letter finally arrived, it showed only 1 month of validity instead of 12. After emailing MDEC directly, they received a corrected 12-month letter 2 days later. The total process from submission to re-entry into Malaysia took 5 months. This isn't an isolated case. Immigration consulting firms working with DE Rantau applicants have documented 4 to 5 month timelines as a common outcome for clients, not an exception. What this means practically, if you're planning to arrive in Malaysia on a tourist visa and transition to the DE Rantau Pass while inside the country, you need to build in a significant buffer. Your tourist visa allowance may expire before your Nomad Pass is approved. In that case, you'd need to exit the country and re-enter once approval comes through, which is honestly an additional cost and an additional disruption that nobody budgets for when they read 6 to 8 weeks. Plan your timeline around a realistic 4-month wait. Anyone who tells you the advertised timeline is reliable hasn't looked at what real applicants have reported in the past year. This catches a lot of travelers off guard, but the next issue catches even more, because it's about where in Malaysia you can actually live. The DE Rantau Nomad Pass is valid for Peninsular Malaysia only. That means Kuala Lumpur, Penang, Langkawi, the Cameron Highlands, Johor Bahru, the east coast beaches of Terengganu and Kelantan, all covered. But Sabah and Sarawak, which make up the Malaysian Borneo portion of the country, are not included in this pass. If you hold the DE Rantau Nomad Pass and you want to visit Kota Kinabalu, or explore the rainforests and longhouses of Sarawak, or spend a month on the islands off the Sabah coast, you cannot do so on your Nomad Pass. You would need to enter those states as a tourist, on a separate tourist stamp, which is available for most nationalities, but operates independently from your DE Rantau residency. Malaysia is one country on a map, but immigration in Sabah and Sarawak has always operated under a distinct legal framework from Peninsular Malaysia. Even Malaysian nationals from the peninsula pass through a border check when entering Sabah or Sarawak. For a DE Rantau holder, the situation is functionally the same as being a visa-exempt tourist in those states. This restriction is documented clearly on the official MDEC portal and in compliance guides for expat tax services. Most YouTube videos on this visa skip it entirely, or mention it once in passing without explaining the practical weight of what it means. For someone planning to spend 6 months in Kuala Lumpur and then explore Malaysian Borneo, that second half of the plan operates under a completely different set of rules. Sabah and Sarawak contain some of Malaysia's most extraordinary landscapes. Borneo's orangutan reserves, the caves of Mulu, the dive sites off Sipadan. Knowing this geographic restriction before you book is precisely the kind of detail that changes how you plan. And this is where costs start adding up, especially when the tax picture comes into focus. Malaysia's tax environment is genuinely attractive for remote workers. But, it really does require understanding how it actually works, because the details create a meaningful fork in the road, depending on how long you stay and how your income is structured. If you stay in Malaysia for fewer than 182 days in a calendar year, you're classified as a non-resident for tax purposes. Non-residents face a flat 30% income tax rate on any Malaysia-sourced income. Foreign-sourced income, meaning money earned from clients or employers outside Malaysia, is generally exempt from Malaysian tax. This exemption is official government policy, currently extended through 2036. Cross the 182-day threshold and you become a tax resident. Residents are taxed progressively on locally sourced income at rates between 1 and 30%. Foreign-sourced income continues to receive favorable treatment for residents under the current exemption, but your overall tax profile changes in other ways. Here's where it gets more nuanced. For freelancers, the 182-day residency rule is the primary trigger. For remote employees, people employed by a foreign company but physically performing their work inside Malaysia, the threshold is shorter. After 60 days in the country, income attributable to work physically carried out in Malaysia can become taxable, even if the employer is based abroad and pays from overseas. This distinction between freelancers and remote employees is not widely explained in DE Rantau coverage. It matters significantly for people who hold formal employment contracts and work long stretches in Malaysia without interruption. What this also means is that your home country's tax obligations don't disappear when you move. U.S. citizens are required to file federal tax returns regardless of where they live in the world. If your home country taxes foreign income or doesn't have a comprehensive tax treaty with Malaysia, the interaction between both systems needs to be calculated before you commit to a full year of residency. This isn't a reason to avoid the visa. It's a reason to speak with an international tax professional before you go, not after you've spent 11 months in the country. This section matters because, honestly, the gap between what the DE Rantau Pass allows and what people assume it allows is wider than most guides explain. The visa does not permit you to work for Malaysian companies or earn income from Malaysian clients. Your income must come entirely from outside Malaysia. This applies to freelancers as well. If your client is a Malaysian business, that income doesn't fall within the permitted scope of this pass. Your dependent spouse, if they accompany you on the pass, cannot work in Malaysia. They're present as a dependent, not as an independent visa holder. If your spouse also has remote income they plan to continue, they need to file their own DE Rantau application with their own income documentation. Children traveling with you as dependents cannot automatically attend Malaysian public schools. Enrollment requires a separate study visa, a process that many families find inconsistent in practice. International schools are the more reliable solution for most DE Rantau families, though the cost range is wide and location dependent. There is no pathway from the DE Rantau Pass to permanent residency. After your maximum 2 years under this program, you exit. The pass is not a stepping stone to any long-term residency status within the Malaysian immigration system. And here is the banking detail that official documentation references but almost no video explains. The DE Rantau Nomad Pass alone does not automatically satisfy the requirements to open a standard local Malaysian bank account. Malaysian banks typically require documentation, such as a full employment pass or company registration, that the DE Rantau Pass doesn't independently provide. If local banking access is important to your daily financial setup in Malaysia, this is a practical constraint that needs a solution before you arrive, not after. With all of that established, let's be direct about fit. The DE Rantau Pass works very well for tech and digital professionals earning at least $2,000 per month, with consistent and verifiable income from a foreign employer or foreign clients. If you have clean documentation, a recognizable digital job title, a valid employment contract with at least 3 months remaining, and 3 months of bank records that match your stated income, your application is in a strong position. It works well for people planning to base themselves in Kuala Lumpur, Penang, or Langkawi for an extended period. These are cities and regions with strong infrastructure, excellent co-working spaces, affordable food, and reliable high-speed internet. The quality of life-to-cost ratio is genuinely competitive with the most popular nomad destinations in the world. It works well for families where one partner is the primary visa holder, and both are comfortable with the dependent arrangement and understand the school enrollment process. Where it becomes more difficult, content creators whose income comes primarily from ad platforms or affiliate revenue, where documentation doesn't map cleanly to employment contracts and client invoices. It's harder for freelancers with irregular month-to-month cash flow, even if their annual total clears the threshold. 3 months of uneven bank deposits creates reviewability problems even when the annual number is technically sufficient. For non-tech professionals, founders, accountants, legal professionals, PR managers, the $60,000 annual threshold genuinely changes the calculation. That's a different financial bracket from the one most DE Rantau content describes, and it's worth being honest with yourself about whether your documented income actually clears that bar before you begin. And for anyone planning to split their time between Peninsular Malaysia and Borneo, the geographic restriction means those are 2 separate trips with 2 separate visa statuses. That's worth building into the plan early. If you carry one thing away from this video, let it be this. The DE Rantau Nomad Pass is a well-structured visa that genuinely works for the right applicant with the right preparation. The problems almost never come from the visa itself. They come from applicants who read the headline numbers, assumed they qualified, and skipped the fine print. The income split between tech and non-tech categories. The document consistency that MDEC reviewers actually check. The 4 to 5 month realistic timeline. The peninsular-only geographic restriction. The 60-day employment rule for remote workers. The banking limitation. None of these are secrets. All of them are documented. The applicants who succeed are the ones who found them before submitting, not after. Preparation here isn't optional. It's the difference between a smooth 12-month base in Malaysia and a rejected application with a non-refundable fee. If you're evaluating Malaysia as your next long-term remote work base, the answers are almost always in the details that take longer to find. This channel covers that kind of practical ground-level information for travelers and remote workers across Southeast Asia. A little time spent on the right research now can save a significant amount of time and money later.